So we have a little bit of a roller coaster of presentation for you today. Some good, some bad, and some downright ugly. So just when the hotel industry was starting to gallop with very, very strong performances from after the pandemic, it seems that we've hit another problem due to a small excursion in the Middle East. It's too early, really, to tell what impact that will have around the world. We can obviously see that in the Middle East, and we will have a look at some of that data, but too early to see really what's happening in other markets around the world. So clearly the Middle East has seen the biggest impact, which happened almost immediately. There was a lot of people that were stranded, so occupancies were pretty strong. But as soon as they were able to leave, the occupancies plummeted. And I will show you a little bit of that before we finish off. Luxury was the biggest casualty, and we'll have a look at that. But before we get there, let's just have a look at the markets around the world. This is demand, so simply occupied rooms, and really just to compare the two, 2025 and 26, the last 3 months. So we're really looking from December, January, February, really neck and neck, 25, 26, no real story there. In terms of what's moving, some of the countries there, you can see India, China. China's been in the doldrums for some time, actually, and it's only really in 2025 that things started to move for China. So some growth, not huge growth. We saw a lot of growth through 23, 24, obviously post-pandemic. But generally the markets are a little bit subdued. India leading the charge at sort of 4% there. So not too bad, but we do expect some changes. Looking at the average room rates, again, fairly big numbers here, and we're looking through to the end of February. We're running 3 months, the last 3 months. Middle East is always the highest average room rate, $220. A very, very strong 9% year-on-year change, and that does include the Ramadan period, which was in February. The African market's a little prone to inflation, currency swings, but it does seem that the continent is stabilizing and finding a much more consistent level of business. There's no doubt about it that the picture will change, I think, quite dramatically. Not so much in Africa, but I think there will be some sort of impact there. Obviously, the Middle East will see a significant downturn, and the very least I think we can expect is September, October. It could really be into next year. Very, very difficult to call. Europeans perhaps are more likely to stay in Europe over the summer, but Europe gets very, very busy anyway, so it will be quite an interesting one. North Africa could be a big beneficiary of the current situation, the current conflict. The Gulf carriers, obviously a major source of tourism both to Europe, Asia, and also Africa. Despite, I think we hear a lot of news about the Gulf carriers. Emirates, I think probably around back to about 40% at the moment. That can change. I got here, I was in Geneva last week, so certainly there are flights coming out of Dubai. So let's have a look at Africa. Again, we're looking at global demand, so again, occupied rooms. The dotted line is 2019. So really, where was 2019? And we can see all the way through 2023, should be 2023 here, all the way through to 2025. Global demand, or rather demand in Africa, has been above 2019 levels. And currently, I think we're running round about, in Africa, around about 6 or 7% above 2019 levels. If we look at the year-on-year, we can see that the last few months has been pretty strong across the whole of the African continent. I know very, very big numbers, but it's directional. It gives us some sort of understanding. Airlift is a concern. Africa does generally struggle a little with airlines, and the Gulf carriers are important when it comes to connectivity across the continent. There may be some benefits to Ethiopian Airlines, for example, some of the hubs in Africa, but we will see how that one plays out. When we look at some of the big numbers here, room supply, room demand, occupancy, average room rate, all the way through to room revenue, what we wanted to do here is just to compare the 2019 levels. In a way, we've got a lot of currency fluctuations when we look at average room rate and RevPAR. Probably shouldn't pay too much attention to that, but room supply running at 3%, room demand a little bit higher, 4.2%. So things are looking pretty good across the whole of the African continent. I mean, there is some, you've got to take some information from the average room rate climbs, and room revenue is also up 105% on 19 levels. And the year-on-year changes are really quite good as well. So things are certainly looking up across the continent. From an occupancy point of view, it's a little bit of a mixed bag. Seasonality plays a part for sure. And we are looking at the last 3 months here. So we're looking at December, Jan, Feb. Up in the north of Africa, generally some fairly strong numbers. In Casablanca. Marrakesh has had some very, very strong rate growth over the last year or two, which might have some sort of impact on the occupancy. Down in southern Africa, a little bit of a mixed bag. Cape Town, again, was very strong from an average room rate growth point of view, would have some sort of impact on the occupancies perhaps, and the Seychelles is a little bit down as well. Kinshasa, we got Kinshasa there, a new market for us, thanks to Sahel from Chic, who has added a number of hotels there, so we're pleased to see that as well. When we look at the average room rates, again, a little bit of a mixed bag, but I would think some of the occupancy declines are something to do with the average room rate growth. If you look down in the Cape Town, 12% growth year on year, Joburg, Maputo, some good growth, Zanzibar as well, Seychelles, 44% up from an average room rate point of view. Again, we do see some occupancy pullbacks and might be to do with the average room rates. Up in North Africa, Marrakesh, Casablanca, Tangiers, all very, very strong from an average room rate point of view, but some pullback from an occupancy point of view. Looking at some of the key markets, Sharm el-Sheikh had a pretty tough period through the pandemic and even after the pandemic, but it's good to see that Sharm el-Sheikh at the moment very, very strong with an 80% occupancy. You can see the year-on-year change there, and this is on a 12-month basis, so pretty strong for Sharm el-Sheikh, Joburg, Tunis, Casablanca, and Cairo, and then at the other end, a few issues in Lagos and Accra. And then from an average room rate point of view, again for 12 months, Sharm el-Sheikh, very, very strong. You've got local currency and the dollar there, so it kind of makes a little bit more sense. But the year-on-year change in Sharm el-Sheikh, 60% up from an average room rate, local currency. Addis Ababa, very strong as well. Some good events going into Addis Ababa. Lagos, strong. And then as we come to the other end of the slide, Nairobi, a lot of new supply coming into Nairobi, which has in the short term impacted a little bit from the average room rate point of view. But still, it's a strong market, and we see that heading in a very, very good direction. Having a look at the composition, so the green is obviously occupancy. You can see that most of the African markets are really being pushed by rate. Not a huge amount of occupancy growth, a little bit outside Nairobi. Zanzibar has actually dropped from an occupancy point of view. But there is some reasonable growth from an average room rate point of view. And also looking at some of the other markets, Kenya, strong. I mean, some good data. You can see some RevPAR growth. We've actually lost the key on there. But generally speaking, fairly strong. Zanzibar we're seeing as a very desirable market at the moment. So generally, some pretty good data coming out of Africa. Fairly large data points here. It's Southern Africa, but just to give really sort of an idea how the classes are sort of operating. You've got luxury class there, upper upscale. Again, very, very good average room rate growth. There is that consideration about currencies, but some very, very good growth all across Southern Africa. And then Northern Africa has seen some very good growth as well. So generally, things are looking pretty strong across the entire continent. Have a look at Nairobi, similar sort of slide, but if you have a look at the percentage change, 2019, I think it's interesting to see. I mentioned supply, big growth in supply in Nairobi, 24%, but demand has also increased by 21%. So strong, strong numbers. Obviously, that's going to have an impact a little bit on occupancy, but it's only dropped by 2%, and there is still rate growth and RevPAR growth and room revenue growth. So I think a very, very good story for Nairobi. And again, I think if you see that you've got the supply curve there, as supply moves up, you generally see the average room rate moves down and occupancy moves down. We see this in every market in the world when new supply comes into the market until it's all absorbed. Let's just have a look at the GCC. A lot of it is overblown, but this is looking at the GCC and how strong it was all the way through. Year after year, month after month, the GCC gets stronger and stronger. And you can see here occupancy growth and average room rate growth all the way to February 2026. That's probably more of an impact on Ramadan than the current conflict. That started on the 28th, so there's no real impact on this particular side. But you can see, again, the GCC market's very, very strong. Oman, Qatar, strong, Saudi. But let's get to the, what's really kind of happening from the conflict. So the conflict, as I mentioned, 28th of February. So you can see that generally this is a year-on-year change, and you can see the 5-day period. You can see that through that 5-day period with no travel outbound, obviously no travel inbound, but generally the market held on for about 4 or 5 days. But then you can see once people managed to move, that things actually came down pretty badly. So I think I've been told that I've got to wrap up. I want to show you this one more. I'm just going to show you this one. So this is actually Dubai, and this is, you can see the big impact here. First week, second week of Ramadan, you get into the fourth week, and the last 2 days. So the average were 72%, 75%, and then they dropped down to 21%. So that's kind of where it is at the moment. We think things will change, but obviously there's a lot of questions to be asked about the market over in the GCC. So thank you very much.
Thank you so super much.